now we will discuss about this. As usual, first I will discuss all the topics between us, then we go to the slides. Is that fine?
Yes, go ahead. No.
For your information, there is one extensive video lecture on borrowing cost in my YouTube. You can watch that. And after attending this class, or if you have time, if you watch it, it will be even better. Now,
Sure.
now normally in a huge crowd, I generally ask first question, what is borrowing? But between three of us, we know what is borrowing. So we don't need to spend time or elaborate on what is borrowing.
Yeah.
However, it is the amount of funds obtained for the purpose of business needs from any body except owners equity contribution. Do you understand this? The amount of funds obtained for the purpose of business from anybody except owners equity contribution. What do you mean by this? The owners, they might also provide funds. And if the owner provides funds, again, owner also can give loan, or owner can contribute as capital.
Yeah.
Owner can contribute as capital. Understand me?
Yeah.
So borrowing are the funds that you receive from anyone except the owner's equity contribution. Anyone except the owner's equity contribution. Understand me?
Yes, yes.
Fine. So now, next is borrowing cost. How can we define or how can we elaborate? How can I elaborate? Borrowing cost.
Is bank charges or investment charges if we
Okay,
take a loan?
first let's list down the examples. Then we will try to elaborate. Mr. Zubai told me bank charges.
Financing charges. Yeah.
Financing
Charges.
charges. Any other examples?
Interest, I don't know. I don't know if it's included in bank charges. Interest.
Yeah, interest. Any other examples?
Management charges, maybe. That we call it, or administrative. That's what we call it. Administrative charges.
Can we think of any other examples or that's it?
I think that I don't know if we covered everything.
Almost we covered, but we missed. I mean, not missed actually. We could include something little more. There's something called
Documentation. Charge. Okay. It's part of the administrative.
yeah.
charges.
You know, sometimes what happens when you read broadly, when you say administrative charges, we may not specifically think documentation charge. That's why I have
Okay.
emphasized that.
Okay. Stamp duty.
So these are examples. These are the examples of borrowing cost.
Yeah.
Are the cost of borrowing when receiving any loans. This cost could be due to the direct implication of the understanding.
Yes, clear.
Are the
Yeah.
cost of borrowing when receiving any loan. This cost, this is fee, could be due to the direct implication of the borrowing. So, example here, administrative charges or management charges or documentation charges or stamp duty charges, these all are one-off. Correct?
Yeah.
Yes.
And these possibly repetitive. Get me? Understood, brothers?
Yes. Yes.
Yeah.
Yeah. So, right, now we were able to elaborate or define or interpret what is borrowing cost. Normally, from our basic accounting knowledge, in my trial balance, sorry, interest expense, you have a trial balance, debit and credit. Interest expense I will show as a debit or credit.
It's expense. So it's debit.
Yes, it's expense.
Yeah, debit.
It is
Debit.
debit. So, what do you think the ultimate treatment of this? Where should this be landed? As you know, we have two possible places. One is income statement, other one is balance sheet. Where will I show this?
Income statement. It's
In
expense.
the income statement. This will go here. Correct?
Correct.
So this is our normal understanding from our basic accounting knowledge we learn from our childhood up to now. When I see interest expense in the trial balance, when I prepare the financial statement, I will take interest expense as an expense into the income statement. Clear?
Yes, clear.
But now, sometimes what happens, brothers, you comment a huge project. Example, in Saudi now you have something called,
Okay.
you know, now although on the outset it's a government project, do you think that alone government can do this?
No.
No. There are amazing
Government
investors.
needs support from private entities. Agreed or
Yes.
disagreed?
Agree.
Correct. Let's say one of the area has been subcontracted to one private entity. Subcontracted to one private entity. Let's assume, just for the sake of example, $300 billion. How much?
Okay, 300.
$300 billion. Now, 300 billion is a small project or a mega project?
Mega project.
It's a mega project, right?
Yes.
Yeah.
And do you think that now this particular private entity at the very immediate situation, would they be capable of managing the working capital for this 300 billion on their own?
No.
No. So then they need the help of people like Mr. Haitam.
Inshallah.
So I will call every time, every 2 days, I will call you to get help. Huh?
Okay.
I'm sure you will block my phone number. Okay. Anyway, so these people will reach a bank. Let's assume they are in need of loan of 100 billion. $100 billion. Okay. 300 billion is the total value of the project, but based on the profitability, based on the cash flow needs, the net working capital needed or funds needed. How much?
100.
100 billion. And assume the market interest rate, these are not accurate numbers, just for my sake of explanation, let's assume 6%. So what do you think the annual interest? $6 billion. Correct? Small money or big money?
Still big money.
It will be very big. Anyway, brothers, there is a different argument to talk about. Materiality. So if you look into the perspective of materiality, 6 billion is substantial or not is a different argument. But on the outset, 6 billion itself is mashallah very big money.
Yeah.
Yeah.
See, I want to tell you one sad story about these accountants. What happens? These accountants are very fortunate in writing these numbers in the books. 6 million, 1 million, 100 million, okay, everything they will write in the books. But what is the probability of touching and putting in their pocket that much money? This is the sad part of the accountant's life.
Yeah, counting without touching, huh?
they are counting and recording and everything, but that's not belong to them.
There's a painful,
Of course, very painful, yes. So anyway, so now this 6 billion is the interest. Now question is, as we discussed, we should go to where? We should go to P&L as 6 billion. Assume your profit before interest and tax is 6.5 billion. I'm just writing some hypothetical numbers. Huh? And how much is interest? So profit before tax, how much? Do you see this? Brother,
Yeah.
do you see this? My profit before interest and tax is 6.5 billion. My interest how much? 6 billion. So how much is profit before tax?
0.5 billion.
0.5 billion. Does that mean because of the interest, my profitability has hit severely?
So when you go back to the Excel file,
Can you agree this?
No, it's reduced.
Yeah, that's what. It's reduced drastically.
Mm.
Do you agree with this?
Okay. Yes.
Yeah.
See, now we talk from IFRS point of view, we talk about something called
before yesterday, before 1 week, when we started here,
fair presentation. From IFRS point of view, we discuss or talk something called fair presentation. In the fair presentation, what happens?
washing machine 5 kg.
Maybe this 6 billion, we could consider making an alternative accounting treatment. That was discussed within IASB. And then they came up with something called IAS 23. They now brought a new accounting treatment for borrowing cost. IAS 23 brought a new accounting treatment for borrowing cost. Now, if I ask you a question to both of you, have you come across this standard before?
No.
No, not
No.
from our side.
No. I was just aware of property plant and that's it. IS 8 and IS 16 normal standard. This standard I don't know.
Okay, no problem. Now what is happening here? Standard says, since we have this difficulty of, or this dilemma of the profit is greatly impacting because of charging the borrowing cost fully to P&L. The IS 23 says that there is an alternative accounting treatment.
See, I will show you.
Alternative accounting treatment. Now it says all borrowing cost borrowed for any qualifying assets could be capitalized during the period of construction. Do you see this phrase now? All borrowing costs borrowed for any something called qualifying assets could be capitalized during the period of construction. And we have now some new terms here. Term number 1, borrowing cost. All of us understood this?
Yes, yes.
Okay, we know what it is. And what about this?
Qualifying assets.
Not clear.
Qualifying asset, the asset that will do ACCA?
Inshallah.
So, what is qualifying asset? Normally, if I go to this example here, in this project, what do you think? Normally, how long this project will take to complete?
Maybe more than 2-3 years.
Very good. More than 2-3 years. What is the opinion, Mr. Haitam?
Sorry, can you repeat the question?
My question is, you see that now we are talking about a project with a worth of 300
300
billion,
billion.
correct?
300 billion.
Yeah, yes.
So, what do you think, how long this will take to complete from our general understanding?
Mega project, it will take maybe, I can say, yeah.
Minimum.
I agree with Zubair. I think 2 to 3 years. Yeah.
Yes. Yani without.
Yeah.
Now, but at least I would what do you call, specify this. See, this is a timeline. 1 January 2019, we started, and for sure, this will not finish on or before 2019. Can all of us agree on this?
Yes.
The project will continue like this.
Yeah.
But this will not finish at this period. So the meaning of qualifying assets are those assets will take a substantial period of time for construction or an acquisition. Are those assets will take a substantial period of time. I would mathematically quantify to complete the construction and or acquisition. Understand me?
Yes.
So, So I hope now you understood the term qualifying assets. Correct?
Correct.
Now, if you do a borrowing for the purpose of having a qualifying asset, then the borrowing cost could be capitalized. Could be capitalized. Give me a second. Yeah. So, you say that. So the criteria is any borrowing cost for qualifying assets should be capitalized. Any borrowing cost for qualifying assets should be capitalized. Yes or no?
Yes.
Okay. Now, what do you think the double entry will be then? Now, this here, what is my borrowing cost here now?
0.5 billion.
No, no, no. Borrowing cost is 6 billion.
Okay. Sorry. Yeah.
So, this 6 billion, I should be capitalizing provided this 6 billion for the purpose of 6 billion for the purpose of
Financing. Yeah. 300 billion.
yes,
Yeah.
for the purpose of acquiring or putting up a construction of borrowing for the purpose of acquiring or putting up a construction of a qualifying asset. Correct? The time it will take for a period exceeding minimum of 1 year. Understood?
Yes. Yes.
Brother? Good. So, my double
Yes.
entry will be then 6 billion I will debit to related assets and credit to cash or bank or borrowing cost payable. Cash, bank, and or borrowing cost. If you are paid by cash, you credit to cash. If you paid by bank transfer, you credit to bank transfer. If you not paid, still you need to pay, then you credit to a liability called borrowing cost payable. Is that fully clearly understood?
Yeah.
Great. Then now I borrow on 1st of January 2020. This is date of borrowing. 1st July 2020, date of construction. 1st August 2022, construction ceased or stopped. 1 January 23, resumed construction. Now let's say we borrowed 50 million. 6% borrowing rate. Now tell me, for the year ended 31st December 2020, how much is my borrowing cost? Can we calculate that? How much is my borrowing cost? Hmm?
6 billion.
6 million? No. Now, brother, I have given a different example.
Okay, sorry.
Sagar, stock item, should I keep balance name
50 into
and
6 billion. Okay.
description and
that is 3 million. Is that clear for both of you?
Yeah.
Yes, yes.
Good. Now the question is, how should I deal with this now? See the scenario. Bank gave me money on 1 January 2020, but I started construction on 1 July 2020. So
Okay,
we
that's
say
6
that,
months.
now first of all, we need to see if this is for a qualifying asset. And do you see that construction is continuing still 1 January 2023? We got the loan on 1 January 2020, and as on 1 January 2023, still the construction is continuing. Do you see this?
Yes, yes.
Yeah.
So that means it takes a substantial time for the construction. Is it very clear?
Yeah.
Yes, it's clear.
Now, Mafi.
Yes, it's clear.
Sir.
Hello?
Yes, can you hear us?
Hello?
Hello?
Yeah.
We lost the connection.
I'm not hearing you all properly. Let me change the internet.
I think now it's fine. Can you hear us? Can you hear us now?
Yeah, now I can hear you. Yes.
Okay.
Could you all hear me?
Yeah, we heard.
Okay,
Yes.
Mr. Zubair was saying something.
Yes, sir.
What you were presenting is not visible now.
Yeah, I realized that. So now, can you see the screen?
Yes.
Yeah.
See now, We received the money on 1st of January 2020.
We started the
Construction
construction
started
on 1st July. Yeah.
1st of July 2020. So during these 6 months, what this fund is really doing? During these 6 months, what this fund is really doing?
Nothing. Nothing.
This
It's,
is our expense, but
Are you with us?
Sir,
Yes. we are with
yeah.
you.
I deliberately muted, so don't worry.
Okay.
So now, during these 6 months, what this fund is doing with them?
Nothing. I can't see anything.
Nothing, right?
Yeah.
So you have the fund with you. You have not commenced the construction. So there is a period where no construction is taking place. And will the bank be very kind with you? Will say that, oh, my friend, you have not done the construction, so we don't need the interest?
no. They will
No, it
start
will be
from day
Will
one.
Mr. Haitham will tell me this?
No, of course. The once
What
you
nonsense? It is your problem to manage the funds. I gave the money, so pay me my borrowing cost. Yes or no?
Yeah.
yes.
Definitely.
So how much
definitely.
is that? Can we do the calculation? So 50 million into 6% into 6 over 12.
Yes.
Correct?
Mm.
So
Yes.
how much will be the calculation? What you need to, how much?
1.5%.
1
1.5.
million 500.
Yeah, 1.500,000
Mm.
or 1.5 million. So this 1.5 million, what do you think the accounting treatment is?
Yeah.
Debit interest expenses.
What should you do? What do you think the double entry for this?
Debit
Finance
interest.
charges.
Pardon?
Finance charges.
Interest
1.5
expenses.
million. Where will I debit?
Expenses, debit expenses or
Correct.
interest.
I will debit as
Borrowing
borrowing
Expense.
cost
cost.
in the income statement. Correct?
Yes.
And then credit to cash or
Bank.
bank or borrowing cost.
Payable account.
Is that make sense?
Yes.
Yes, sir. Yes.
Now what about this? During this period,
The same 6 months.
so how much is the calculation? So here 1.5 million, correct?
Yes.
So here how much? How much here?
Same 1.5.
Same, right?
Yeah.
Yeah, same.
It is the same double entry.
Sorry?
Yes, it will be the
What do
same.
you think the double entry will be?
Debit borrowing cost.
And this should reflect where? This borrowing cost will reflect in the income statement?
Yes.
No, brother. See,
Why?
you have to relate to the clauses given in the IAS 23. all borrowing costs borrowed for any qualifying assets could be capitalized
Capitalized.
during the period of construction.
Okay.
Okay. So it will
Okay.
be capitalized and then
Capitalized.
amortized.
Yeah, amortized, we will come to that, but it will be,
Capitalized. Okay.
it should go to the related assets.
Yeah.
This will
Okay.
go
Then
to the
we will
related assets.
amortize.
No, it will not be amortized, brother, because I'm going to capitalize this to any non-current tangible asset.
Okay.
So then later we have to depreciate it.
Okay. Okay.
But if your borrowing is for any intangible asset, then you will amortize.
Mm-hmm.
So
Okay.
Mr. Item understood this now.
Yes. Clear.
So credit will be the same. Cash, bank,
Related.
or borrowing cost payable. Is this clear? Is this make your life easy?
Yeah, clear.
Good. Now, then go back to the diagram again. This time period from 31st, sorry, I made a mistake here. From 31st December 2020 to 1 August 2022. During this period, is there any problem to the construction?
No.
No problem to the construction. Construction is smoothly continuing. Correct or not?
Yeah.
Yes.
So during that period, are we going to incur borrowing cost or not?
No, we will put the same as the asset.
Related
Yeah, my
assets.
question, sir, before that, my question was, during this period, am I going to incur borrowing cost or not?
Yeah,
Yes, there will be
definitely.
borrowing costs. Yes.
I
Definitely.
will incur
Yes.
borrowing cost, definitely, correct?
Yes.
Yeah, correct.
Yeah, then the next question is, how am I going to deal with this in our books, in our accounting? Where should I take the borrowing cost? According to IAS 23, during the period of construction, if I have a borrowing for qualifying assets, that borrowing cost should be capitalized
Related assets. Yeah.
to the related assets. The cost of that related assets will increase.
Yeah.
So this period is a normal period. We have no problem. All will be capitalized. Understood?
Yes, clear.
Now what about this period now? August 2022, construction ceased or stopped. And 1 January 2023, construction resumed or continued. So now
I
from
think
this date to this date, how many months?
8, 10, 11, 12. 5 months. 5 months.
Very good. 5 months. During these 5 months, Are we not going to incur borrowing cost, or we will incur borrowing cost?
This is express. If you have standard bills,
Well,
system also work very fast. If you have standard,
yeah, there will be, borrowing cost, which is the interest expense.
Yes, we will still incur borrowing cost,
Yeah,
but this time we
there will
cannot
be
capitalize this borrowing cost to
to
our related
related
assets.
assets.
Okay,
Yeah,
the last year, yani.
yeah,
I mean,
because the
no, I'm not talking about the last year. I'm talking about this period. There's a lapse in construction.
yeah,
Mhm.
See?
the instruction sheets.
Yes.
Okay, okay.
So maybe due to a legal action, or maybe due to a fund shortage, maybe due to a staff not available, due to any reason, during this period, construction stopped. But bank is going to charge you interest. And how am I going to treat or deal with this?
The same
This during this period, same treatment
as
takes
of
to,
the beginning.
yeah, exactly, as like the beginning, take to
Yeah, profit
P&L.
and loss.
But then, what will happen from this date onwards?
What is the situation again on this period?
See, on 1 January 2023, they resumed the construction.
Received.
Resumed.
Okay. Resumed. Okay. So the same. Not. I mean, it will be capitalized.
Very good. It will be capitalized. Is this diagram is very clear?
Yeah, clear.
Or looks like Chinese language?
That's clear.
Very clear, right?
Yeah.
Fine. Now let's move on to another different point of view. For example, I received 50 million. This is date of loan received, interest rate 6%. What is interest rate?
6%. Okay.
July 2020 construction commenced. Now, as we understood from the previous example, in this, since I am continuing the same example, this 6 months, no construction, no utilization of funds, no construction, no utilization of funds. Understand me?
Yes.
Now, since we all into finance professionals, we also understand the worth of something called Do you understand this?
Opportunity cost. Okay. Not familiar.
What is opportunity cost?
Not familiar from my side.
Hmm?
I heard about it.
Any idea, Mr. Haitham?
Honestly, opportunity cost. Not familiar. I mean,
No idea, right?
no idea.
Okay, Mr. Zubair.
Yes, sir. Pardon.
Question is, what is opportunity cost? Do you know or you don't know?
Opportunity cost. No. The exact, I think last time I gave an example, but I don't know exactly and the meaning.
We discussed in the previous classes in our session.
Yeah.
Okay, let's assume tonight my dad gave me $100. My dad called me, my son, come here, take this money, $100. Okay, so now $100 not in your hand. You are wondering what to do. With this $100 note, you are wondering what to do. You also left with some options. Let me assume we left with two options. Go to a movie theater, watch an interesting movie, buy the ticket, buy popcorns, ice cream, juice, kida, and then you finish the $100. One option. Option two, you don't go to movie, you go to a retail outlet and you buy some dress. You buy two t-shirts, one is free or something. With all this, you spend the entire $100. So there are two options now. Option one, go to a movie. Option two, purchase dress. Now, you decided to purchase a dress.
Okay.
What you decided? You decided to purchase a
Purchase the
dress.
dress.
So then now to relate this to our opportunity cost. What is opportunity cost? If you purchase the dress or had you purchased the dress with this $100 available with you, could you also go to movie?
No.
No.
Yani I have
No.
option.
Yeah, you had the option either to go to movie or to buy the dress. And now you decided and you went and purchased the dress. So you are unable to go to movie. Is that clear?
Yeah.
Yes.
Okay.
So
Opportunity cost. No.
amount of satisfaction, amount of feelings, amount of happiness or whatever you could have received had you visited the movie, will you receiving it or not?
Yeah.
What? Now you are not going to the movie, and
Definitely.
the amount
dress.
of entertainment that you predicted by visiting movie theater is now applicable or not applicable?
Not
No,
applicable.
Not applicable.
So in other words, you are foregoing the amount of entertainment that you supposed to have received. Correct?
Yeah.
Why? Because you choose to spend the $100 in buying the dress. Correct?
Yes, correct.
Yeah.
The opportunity cost is the satisfaction that you forego by not choosing the next best alternative. opportunity cost is the satisfaction foregone by not choosing the next best alternative. Next best alternative. Is that clear?
Yes, clear.
So, coming to the point that I'm going to talk about, you have 50 million on this date. You only need the 50 million on 1 July. So during this period, the money is sitting doing nothing, correct? Shawadala, yes or no?
Hello. Sorry, I didn't hear you well.
Okay. 1 second. Mr. Haitham, can you hear me now?
Yes, yes, I can hear you now.
Okay. What
Yeah,
about
before-
Mr. Zubair? Mr. Zubair? Hello? Mr. Zubair? Mr. Haitham, can you hear me? Mr. Zubair is not responding.
Yeah, I can hear you now.
Okay. So let me continue. So do you see that I have 50 million on 1 January 2020 until 30 June 2020, this money is sitting with me without any use. You understand that?
Yes.
So accordingly, a prudent financial manager, what he will do for these 6 months?
You invest it. I don't know.
Exactly. I'm expecting that answer.
Okay.
A prudent financial manager will invest in short term. Correct?
Yes.
So suppose let's say short term deposit you have 4%. So how to calculate that? 50 million,
Okay.
4% into 6 over 12. What is the answer?
Okay. $1 million.
Now this 1 million is what? Is an expense or income?
No, he will expense that mean. He will invest it.
Habibi. No.
Uh-huh.
So you will have total, you have the expense for the full year 3 million, correct?
Okay.
This is the total borrowing cost for you.
Okay.
But for the first 6 months, your expense is 1.5 million. That also we understood.
Okay.
But now what is happening? You are investing this 50 million for the first 6 months. So when you invest, this is what? This is your income for you, expense for you.
Income.
Income.
Yeah.
See, 1 January 2020 to 30 June 2020. 1 July 2020 to 31st December 2020. You have borrowing cost 1.5 million and here also 1.5 million. This will go to P&L and this will go to balance sheet as capitalization minus interest income. And this 1.5 million will remain as it is. You understand this
Yes.
interpretation?
Yes.
So that is when you have any short-term investment from the funds you have taken for the purpose of borrowing cost. I will join in few minutes. Please wait.
Yeah, sure.
Okay.
Yes, brothers.
Yes.
So now, in this scenario, for the first period, this will go to P&L and this will go to
BS.
asset. Correct?
Correct.
This is the accounting treatment that is stated by IAS 23. Okay? What will happen? Another scenario. I have taken a loan on 1 January 2020. Loan 60 months. Okay?
Okay.
Construction over by 48 months. What do you think the borrowing cost in the last 12 months?
It's construction for over by 48 months.
No. Yeah, brother, you see, this is 48 months.
Okay.
And here I have another 12 months. Okay? Now I borrowed the loan on this date. And that means my clock will start ticking from this date. So I will have interest or borrowing cost from 1 January 2020. Correct?
Yes.
Then up to this date, meaning 20, 21, 22, 23, 31st December 23, my construction will finish.
Okay.
Now, during these 4 years or 48 months, this interest, according to IAS 23, what must I do?
It will be considered in BS, which is,
Yeah, in the BS, so it should be capitalized.
capitalized. Yeah.
Now we complete the construction here. Construction get completes on 31st December 23. But still I am continuing my loan.
Okay.
So during this period, still I will incur interest expense. Yes or no?
Yes.
So what will I do with this interest then?
Will be P&L. That's what.
Correct. This will go to P&L
P&L.
as expense.
Yes.
And I believe this much only we need to have an understanding as to borrowing
Okay. Cost.
Any question you want me to you need to ask me?
Oh, it's clear.
Very good. Construction or production of qualifying asset form part of the cost of that asset. Other borrowing costs are recognized as an expense. I believe this is very clear.
Yeah, very clear.
An entity shall apply this standard in accounting for borrowing cost. Yes. The standard does not deal with actual or imputed cost of equity. Meaning, if the owner investing money and if the owner is expecting any return against the investment, that investment you call it capital. And you will not consider as a borrowing cost. And also, there is something called preferred capital. Preferred capital not classified as liability. I hope.
Preferred capital. What is the treatment of this?
I'm going to discuss that.
Okay.
Share capital are divided into two. Ordinary share capital and preference share capital. Ordinary share capital and preference share capital. Have you come across this or not?
No.
So please know that share capital can be divided as two: ordinary share capital and preference share capital. Fine.
Yes. Yes.
Now, what is actually the ordinary share capital? We'll think about a very typical Asian family house. Okay, a typical Asian or South East Asian family house in a village. I don't know how much experience you have, but I'm coming from that, so that's what I'm picking that example.
Okay. Okay.
So, brother, in that house, let's assume you have father, mother, and 3 kids. Assume like this. So this family of 5 members, father, mother, and 3 kids. And average income or earning is like nus. It's average. It's not. It's very rich, or is not very poor, but he's like a medium earning person. Earning person is actually surviving to manage to feed the family. Understand me?
Yes. Clear.
In this case, let's assume one particular day or one particular night. The mother will make the meal. Mother will prepare the meal, and in these village scenarios, usually you will find them in 1 second. No? So, in a typical, I'm back, Mr. Item.
Yes, I'm with you.
Okay. You will normally you will find the meal will be made in a pot. Okay. Usually, what you think the meal will be? Can I guess from you? A
Soup.
typical.
Okay.
I would name it rice.
Biryani. Okay, rice biryani.
Biryani, yes, biryani. No,
Okay.
in a poor family, brother, you can't expect the biryani to be there.
Okay.
In such a situation, you will find rice.
Okay.
If it is biryani, meaning they are very well off.
Okay.
So now the mother's responsibility is to feed the father and the kids and to keep something for her to eat. Correct?
Okay.
What she will do? She will first feed either. Let me assume she will feed first kids. Okay,
Yes.
and then she will provide meal to husband, meaning father. Now the scenario, brother, very sometimes pathetic scenario. I have experienced personally with my family and my mother. After feeding all of them, when you check the pot, unfortunately, brother, nothing left. Have you come across this scenario?
Yeah.
Many times, these
Many
mothers,
times.
yeah, actually, my mother, I'm getting a bit emotional, but we experienced this many times. In a week, probably 3 days or 4 days, I remember my mother slept without eating. She is passed away now. So
Right.
anyway,
It's the same situation,
yeah.
This is,
So
mother.
then this is one possibility. See, there's other possibility also. What is the other possibility? Maybe this pot is full of rice, and she feeds the kids, she feeds the father, and maybe a portion is left. Correct?
Mm-hmm. Okay.
And a rational mother, will she like to throw the remainder?
No.
What she will do then, she will
Take it to the fridge or
finish
whatever.
eating. She will finish eating all. This also a possibility. Yes or no?
Yeah.
Then some of the houses you may have seen the mothers are double the size.
Sorry, Mr. Mohammed. Your voice now becomes not clear.
My voice is not clear.
Now it's fine. Now it's okay.
See, in some of the houses, the mother's size are double the size. Have you seen this? Because they are compelled to eat the leftovers. Okay, you must be wondering why I had to talk this story. Because to talk about this ordinary share capital. Meaning, I would also name them ordinary share holders. I would also name them ordinary shareholders. So the ordinary shareholders are we call it founders. Who are they?
Okay.
They are founders. Now, what happens with founders, brother? In an organization, at the end of the period, maybe a year, when you happen to share the revenue, this revenue need to be distributed to many different. All of them be named it.
Shareholders.
No,
Stock.
no, no,
Okay,
no.
stock.
stakeholders.
Okay.
Do you know who are these stakeholders are?
Yeah, the owners.
No, brother. That's a different term. That is stockholders.
Okay.
You see the spelling difference here, and here it is K, it is CK here.
Okay.
Have you come across a word called stakeholders or not?
Well, pass by, but I'm not really sure what is the behind this
Okay,
terminology.
let me give a bit of an elaboration to that. Any party who have,
Or affected.
yes, Mr. Zubair,
Yeah.
any party
Stakeholder
who
are a
have,
related party.
you could name it related party, but more than related party. They are not only related, who are related party?
Affected, yeah, affected or related.
The better term is affected. If you use the related party, then there's a different meaning coming. Any party who have legitimate interest
Mhm.
on the business,
Okay.
them are known as
Investors.
stakeholders. Stakeholders are one is internal, other one is external, and the third one is connected. Internal, we have
Employees. Okay, I got it.
employees and
Yeah.
management.
Yes.
External, we have public,
Investors.
no, public, then we call it pressure group. Do you know who are these pressure group?
Yeah. These organizations, human organization like
Yes. So the human organization, different organization, like so external are public, pressure group, and government, whereas internal are employees and management. If you list every other group, they will fall into connected. Shareholders, then auditors, then customers,
Suppliers.
suppliers,
Yeah. Okay.
finance providers like Mr. Haitam. Mr. Haitam,
Yes.
will you be afraid to share your address in Riyadh?
Afraid to share what?
Your address to come
My
and knock your
interest.
door. Yes,
Uh-huh.
to come and knock your door to ask for finance.
Well, I'm only signing documents. Not only this is what you said, seeing, the numbers without, touching it.
Exactly. We all in the same boat.
Yeah.
So, finance providers. Then we also have, sometimes we can also lenders, lawyers, competitors, and so on. So what I'm trying to mean, when you, let's say, when you make 1 million your revenue, this got to be shared among all of them. Don't you need to pay your suppliers?
Yes,
Don't you need to pay finance providers?
of course.
Don't you need to pay? Okay, I can also include here tax authority. Don't you need to pay the income tax people?
Yeah,
And don't you need to pay the employees' salaries?
definitely.
And don't you need to pay the audit fees? And what do you think? Maintaining customers is a costly exercise. Do we have a cost or not?
Again, couldn't.
In maintaining customers,
Yes, we have a cost.
do we have
Yeah.
cost?
Yes, of course.
We
Advertise.
definitely have cost. We need to maintain a database. We need
Yes.
a receivable clerk. We need a
Discounts.
software, so on, right?
Yes.
So, brothers, from the revenue of 1 million, I need to keep on distributing to all these stakeholders.
Okay.
Correct?
Correct.
At the end, let's say something is left over, like 100,000 is left over. After distributing to all of them, 100,000 is left over. Yes or no?
Yes. Okay.
So,
Okay. Leftover 100,000.
now this 100,000, this 100,000 is the leftover. After completely distributing to all the stakeholders, who will take this? This is belongs to whom? This is belongs to the
Ordinary.
this team, ordinary shareholders who really took the risk, who really took the
Took the risk. I see.
risk. And after giving everyone, alhamdulillah, they had 100,000, they will take all. Like the mother.
Yeah.
Now, if I bring an alternative scenario, you have revenue of 1 million, but your total payment to stakeholders goes up to 1.1 million. So you need how much more?
100 million. 100,000.
Who should pay this?
The owners, maybe.
Now, can you tell the employees, my friend, this year we don't have salaries. Can you be kind on us? Can you tell this?
No. The
We
retained
cannot.
earnings. So we will take it from the retained or no, the reserves,
Yes.
maybe.
So that means
No.
we should take this from whom? The same ordinary shareholders who took the risk.
Okay.
We can also name them risk bearers. Correct?
Okay.
So do you see the relationship between this and the example I gave you? The
Yeah.
mother.
Yeah. Clear.
So that's why I brought the example of this mother in her house.
Yes.
She is the risk bearer.
Yeah.
There is also another financial management term, higher the risk. Can you complete?
Better.
Higher the risk will give you
Higher
higher the
income. Income, maybe. Income.
as a return. Correct?
Return. Oh, yeah, okay.
So
Correct.
after completely distributing the meals to everyone, whatever left over, no one is coming to share with her. She will gallop it all.
Okay.
Same story with the ordinary shareholders. If the company will make enough revenue, if this revenue is 2 million, for example, where's my example? That one. Where I have written. Yeah, let's say if the company has made 2 million instead of 1 million, yeah, here, no. If the company has made 2 million here, what do you think? The payment to the stakeholders, should that be increased?
Yes.
No need. Habibi, your
Okay,
salary,
okay.
your salaries to staff, you agree a salary. Sawalala.
So,
And then can the employee come and ask you, my friend, you made 100 million revenue, so give me more salary?
no.
But it is your generosity in looking after them and then paying bonus or incentive later.
Okay.
Correct?
Yeah, correct.
But the monthly agreed salary will remain as it is. No one can come and poke on changing it. Right?
Yes.
Same story with the rent. What about the rent?
We have
Simply
to
because
pay
you
that.
manage to produce more revenue, you don't need to pay extra rent. Correct?
Yes, you're right.
Yeah.
So likewise, brothers, all different payments will be almost fixed, although the revenue is bigger.
Clear.
Accordingly, the founder shareholders can enjoy a bigger return. Correct?
Yes,
So
yes.
this is who are them? They are known as ordinary shareholders. Now coming to preference share capital or preference shareholders. Now coming to preference shareholders. Who are these people? Now let's say sometime your father goes out in the house. The house, the father goes out for a business for 5 days. And father gave only 100 rupees or 100 riyal to mother for expenses. And 3 days over, all expenses, all money finished. Now 2 days left. But then next neighbor, now see 2 house here. This is the house we are talking about, that 2+3 family. And this house, they are friends. She goes and talks to the lady here and asks to support for 2 days. During this 2 days, we are unable to feed my kids. Could you please share some of your meals? And she says that in return, when my husband returns, I will pay you some incentive. Understand me?
Yes, yes.
In this case, should this neighbor feed this family for a long period of time?
No.
No need. Only 2 days, correct?
Yes, correct.
So, who are these preference shareholders? Who are people will fund the business only for some short-term need. Funding business for short-term needs. What happens? After achieving the need, the business will agree with the preference shareholders, I will return the funds. But the original shareholders, remember, when you invest to the business, there is no requirement that the company must repay back to the shareholders. Understood?
Yes, now it's clear.
Like, the father and mother feeding the kids. Then after 3 years, will the parent give an invoice to the children? We pay the cost of our meal.
No,
Is it anything logical here?
no, it's not logical.
No, totally not logical. Same story. The ordinary shareholders who are the founders of the company, the amount of money they invested on the business, they will not expect anything. Whereas preference shareholders will invest on the company only for a short period of time, like for 5 years. They will invest only for 5 years, only for 5 years. And at the end of the 5th year, the company should repay. I'm really going little bit out of IAS 23, but
This is
I
what
can't
happened.
help it.
I said this is what happened in during Corona when the government supported the companies without any interest. This is what you're trying to
Yes,
say.
exactly. Brother, what the point I wanted to raise, I'm going little bit out of IAS 23, but I have no
Yes.
choice. I had to explain this.
Very good, very good. I'm fine. I'm having more knowledge. I appreciate that.
So now what will happen? The company will receive funds for a short period of time. I will write within bracket a word normally. Now you may wonder why I am writing this. Most of the time, majority of the situation, this is what the scenario is, where the company will repay the funds at the end of the short period of time, maybe 2 years, 3 years, 5 years, or 10 years. But there is a lesser possibility, although it is preference share capital, yet company will retain the funds for a never-ending period. You understand, Mr. Haitham?
Yes, I understand.
So, and the company will repay the capital and an agreed amount of dividend. This word is very important. Agreed amount. At the time of giving you the fund, now like the next door, the neighbor, she is giving the food to the children. She will tell, look, end of the 2 days, you should pay me 200 rupees. So mother will agree or disagree?
I will agree.
Yeah, because mother has no choice because father is not at home and then she has no means and then she got to feed the kids.
Yes.
Correct? In the same scenario, company will receive a fund because they are in need. And they will negotiate with the people who are funding. They will say that, look, my friend, we will give you a dividend of 8% or dividend of 12%, something like this. Now, one more difference between preference shares and the ordinary shares. There is no agreed dividend for ordinary shareholders. Understand me? Here, no agreed dividend rate. Now, so this is good or bad? Now, for example, if we say that in the home, every person should be given only one plate of food, one plate of meal. If you say like this condition, what could then happen? Whether the pot is full of meal or pot is less of meal, we should, this is committed to feed all 5 of them. Correct or not?
Yeah.
Similar story. If you agree like that, then ordinary shareholders also should be paid dividend regardless of the sufficient profitability or not in the business. Make sense?
Yes.
Correct. So on the other hand, preference shareholders not like that. You got to agree in beforehand. This is what our dividend rate is. Like this, 8% or 12% or whatever. And then every year you will calculate. Now, how the dividend normally calculate? We calculate this, let's say the preference share capital is 1 million, for example. And the dividend will be 1 million into example 8%. So that will be 80,000. Correct?
Yes.
Remember, dividend is calculated on the capital. Dividend is calculated on what?
Capital.
Net capital or
Pardon?
net capital?
I didn't understand your question, sir.
I said it dividend will be calculated on the capital.
Capital meaning preference share capital. The capital you receive from preference shareholders.
Okay, fine.
So, fine. So this you are committed to give. Correct?
Yes.
Fine. Now, there is one more additional discussion I need to carry on with regard to preference share capital. I will write PSC. We could categorize the preference share capital in different criteria. One criteria, whether redeemable or not. So based on that, I could categorize the preference share capital as to redeemable preference shares, irredeemable. What is the meaning of this? Redeemable preference share meaning like the same example what I wrote here. After 5 years, what will happen? After 5 years, they will return the funds. See here?
Agreement. Yeah, the agreement.
So this example is redeemable preference shares. Then when you say irredeemable preference shares, remain in the business for longer period. Clear?
Yes.
Secondly, if you find it complicated or if you find you don't understand, I humbly request, please do ask me.
Sure.
Cumulative or non-cumulative. Cumulative or non-cumulative. What do you mean by this? Now we talked about dividend. In this case, how much is the example?
80,000. Okay.
And let's say the profit of the business is 200,000. Just assume. What is the profit? Profit of the business is 200,000.
Yes, yes.
But how much is my dividend?
It's 80.
Hello?
Yes, it's
How much is
80,000.
the 80,000? Do I have enough profits to pay this dividend?
No.
Sir, you see, my profit is 200,000 here, correct?
Yes.
And the dividend that I should pay, how much?
80, but which is not enough.
So meaning, do I have sufficient profits to pay dividend or not?
No.
Brother, profit.
Okay.
This is
The
the
profit,
term
yes.
profit after this,
Yeah, okay.
after deducting all expenses. I have
Yes, you have.
profit of 200,000, but I need
Okay. 80,000
80,000 as
from it.
dividend.
So it's
I have,
sufficient.
right?
Yes, enough.
Correct. Very good. Very good. So I will bring you another scenario. I have a profit of 60,000, but the dividend is still the same. Now, do I have sufficient profits?
No.
See, when you agree on cumulative or non-cumulative, what do you mean by cumulative? In a given year, you don't have enough profits like this situation. Like this situation, you don't pay dividend to the preference shareholder in that respective year, but you go to the next year. Let's say the next year, your profit is 300. So, last year, how much dividend we didn't pay?
The 80, you said.
Now, current year, for the year 3, how much dividend we need to pay?
Um, that will be more than
Same thing, no?
Yes.
Same amount, because it's a fixed.
Okay.
So, the current year also I need to pay 80. Last year I did not pay 80. So, total, how much dividend I supposed to pay?
160.
160. So, do I have enough profit?
Yes.
So, this is what we mean cumulative scenario.
Okay.
So, what is non-cumulative then? If in any given year you don't have enough profits to pay dividend, you simply forget. You don't pay dividend and you don't carry forward to the next year. You understand me?
Yes, clear.
So this is cumulative. So one way I categorize the preference share capital as redeemable or irredeemable. Second way I categorize as cumulative or non-cumulative. Cumulative, non-cumulative. Here, carry forward, dividend for future years. Here, do not carry forward for future years. Understand, brothers?
Yes.
One last discussion is there's something called participative or non-participative. What do you mean by here? Let's say profit is 500. How much is the profit available for distribution? Huh? How much?
500,000.
How much is the dividend for the preference shareholders?
You said 80? Same?
Okay, 80. So the dividend available for the preference shareholders 80, profit now available 500. So remaining how much?
420.
420. Now, what is our logic? This 420 should be given to whom? Now we talked about two different types of shareholders,
Shareholder.
correct?
Yeah.
So one is ordinary shareholder,
Ordinary.
other one is preference shareholder. So the remaining profits after distributing to everyone, that should be given to whom?
Okay, we said the
Given to
ordinary.
the ordinary shareholder. But
Okay.
the logic that the category here, what they are talking about, if the company agreeing to share additional dividends even after distributing dividends to the preference house, from 420, if you say that, okay, I'm happy to pay another 100,000 to the preference shareholders dividends. So you understand me?
Yes.
So this method is preference share. Third category, we call it participative. Who are participating? They are participating in the remaining dividends for both ordinary shareholders and preference shareholders. We have something called non-participative. Who are non-participative? They don't have the right to share the remaining dividend. Is that clear?
Yes.
Okay. Actually, this much discussion for IAS 23 is not necessarily needed, but I thought it will enhance both of your knowledge level. That's why I discussed it.
Yes.
Okay.
Yes.
And I actually needed to continue the IAS 23 some more, which we will continue in tomorrow's session.
Okay.
Tomorrow we will start. Can we start at possible to start at 6 p.m.?
6 is too early, but we will try.
Okay, then
because
we'll make. Sorry for today's situation. I will meet at 6:30 tomorrow.
Inshallah. Okay.
Okay.
Oh,
Thank you so much.
inshallah.
Thank you.
Sir. Thank you.